Let's get to today's market action. Jared Levy, Zacks.com senior equity strategist, and Lance Roberts, STA Wealth Management CEO and chief strategist, who will share their top stock plays and what they're avoiding. That's just as important. We also have Larry Shover, SFG Alternatives chief investment officer, joining us from the CME. Larry, on this first trading day of November, does it set the tone for what has traditionally been a decent month of the year for trades?
It has, but boy, what a week it has been. I mean, good grief, on Monday, people walked in thinking it would be prerogative that the S&P 500 was just going to climb up to 1,800. Wednesday and Thursday come, and all of a sudden the market thinks that we're stretched, we're extended, we're due for some type of consolidation. And Liz, on Friday now, even though we're up a little bit, the sentiment has turned a little bit gloomy for whatever reason. I mean, people are just worried. They continue to be negative, even though November historically is a very good month.
Well, it may be gloomy, but Jared, I got to say, even if it is a bubble, there are a lot of us out there that think that, you know, you got to be careful with all this money printing going on. There's got to be a bubble somewhere. Maybe it's a stock market, but even if it is a bubble, a lot of investors are saying, hey, you have to play along, right?
Yeah, that's right. I mean, you know, you can either be right or you can be rich, right? I mean, you can't sort of be both. And basically what that means is you got to follow the crowd. And the crowd right now wants to be bullish. Look at the majority of investors. They're buying these dips. And listen, Dave, I do believe we'll see a 1 to 2% correction. But you know what? It's going to be met with buyers unless there's some major catastrophic
1 or 2%.
Event.
That's the most timid pullback I've heard of so far.
Yeah, I mean, because I'm watching this market action, and you know, like we talked about, every pullback, I mean, you think it's going to just continue on, and it doesn't. The buyers come flowing in.
You're right.
And I think the buyers are underlying.
Lance, Jared's right, but you say whatever the correction that comes, you're pretty cool about it. You're copacetic. Let me think of another C word. You know, you're not really concerned. Why not?
Well, I'm not, because I agree with Larry, and you know, Larry and I were here last time we were on together and had the same conversation. Basically, is that, you know, the one thing that bothers me is that there are so many people talking about a bubble. That probably means that we're not having a bubble at this point. Because generally nobody sees a bubble until after the fact. So, but Larry's absolutely right. The trend is positive, momentum's positive. The Fed's not tapering QE anytime until after the first of the year at the earliest. So the bias is really to the upside. And if we do get a 1 or 2% correction, I'm right there with Larry. Got to be buying it.
All right. I think he's with Lance, not necessarily Larry, because Larry sounded a little more gloomy than Lance did. But, Larry, I want to go back and talk specifically about oil, because a lot of people are looking at its drop, wondering what that portends. What does it portend to you?
Well, it makes gasoline cheaper, I think, but I think it's actually an overhang that most of us aren't looking at. I mean, it's true that oil is down quite a bit from where it was even 2 months ago, but some of that is strength of the U.S. dollar. Part of that is just the risk of the Middle East is dissipating quite a bit with Syria, with Iraq, et cetera, et cetera. But the oil is starting to get harder to get to. The break-even points for oil in the U.S. tend to be somewhere between $90 and $100 a barrel, so we can't have oil prices floating at this level for too long, or they'll just start shutting down production, and we'll see oil shoot right back.
Exactly right.
Yeah, because that's what they do. They cut down on the supply, especially at the refinery level.
Yep.
Okay, Lance and Jared, show us the money. We're waiting for real money-making ideas. Jared, we'll begin with you. You're saying pick stocks, not sectors. Let's talk about why that's your theory, and give us your first name that you love right now.
Okay, a couple names are sort of on my list, but remember, to reiterate what you just said, Stop thinking in terms of sectors. It's not about that. Look at individual stories of stocks. And I think you really need to dig deep and look at their PEG ratios. Anything with a PEG ratio above 1.7 or 2, that should be sort of a little bit of a caution, a red flag for you to look deeper and make sure that you can justify their PE multiple. Okay, so here's what I'm looking at. Next week, Michael Kors is reporting earnings on the 5th, and I like the stock. First of all, they're being added to the S&P 500. They've got a lot of great momentum. I am a little concerned with Q4, but this company's been performing, firing on all cylinders. I'm a buyer here of Michael Kors ahead of next week's earnings report. And one other stock I want to mention real quick here is, well, two of them actually, Sanderson Farms and Pilgrim's Pride. I love chicken. I loved it for a long time. Both of these stocks have actually had decent reports. They've come off of their highs. But you know what, guys?
This is a Thanksgiving play, by the way, Jared. This is because they also make a lot of turkeys there.
They do. You know, but again, chicken's a good alternative to meat, and I like both stocks fundamentally.
All right, Lance, let's talk about Exxon, and in particular with regard to what we were saying about oil coming down. Why Exxon now as oil is coming down?
Well, first of all, I agree with Larry's sentiments that, you know, this is an issue with supply and demand, but we're also moving into the end of the year, which is typically a weak period of the year for oil prices. After the beginning of the year, we'll see an acceleration of oil back to the upside most likely, but the $100 plus barrel of oil we had earlier this year, it takes a while to translate into the actual balance sheets of ExxonMobil. So I think towards the end of this year, we'll still see better balance sheets there. But one thing real quick about the market in general, I am concerned about this extension in the markets that we've got, and I do think there's a potential that the low-hanging fruit of easy money's been made. So I like these bigger companies that have dividends and strong balance
Well, they're
sheets.
all defensive stocks. You pick P&G,
Exactly.
Kellogg, Clorox. These are all defensive stocks.
Absolutely. They are, because if we get a downturn in the market, the stocks will get hit the hardest. And you mentioned this early, David, about small and mid caps underperforming. That's a sign that says this market may be getting a bit tired. So I like these bigger defensive names at this stage of the market cycle.
The Wall Street Journal, interestingly enough, Jared, is reporting that Instagram has shared its first ad. Okay, everybody's wondering how are they going to monetize Instagram, and it's a Michael Kors ad. What does that tell you? Right up along the lines of your stock pick, which is clearly in the collective fashion sense of what's happening in the U.S., and they're turning their backs on Coach, for example. How dangerous can it be when you go with what you think is a hot stock, and then just a couple of years later, you've got to make sure you take those profits, Jared?
You do, and that's the other thing that I can tell people at this point. You know, take baby steps. If you get into a stock and you make a little bit of money, take that risk off the table. You know, something like Michael Kors, there's a lot of excitement around it. Listen, if you've been in it, you've made some money, reduce your risk. And with any stock that's a sort of momentum play, don't be afraid to wind down as you're making money. You can always get back in when things get worse or if there's a pullback. And you know, with Michael Kors and momentum stocks, those pullbacks can sometimes be sharp. So you got to be really careful.
Larry, I'm going to give you a chance to pay back Jared for calling you a nice young man. Go ahead.
Hey, we're both from Philadelphia. He's got great hair. I'd like to have his hair. Forget about the chickens.
Oh, boy. The second section of the show, ladies and gentlemen. Hey, Jared, thank you very much.
Right about now, Lance is like, mine's not that bad. I mean, I have good hair, too. Good to see all of you. Thank you so much. We'll check back in with Larry in just a few minutes for the S&P futures.
Well, the S&P futures are closing. Let's go back to Larry Shover in the pits of the CME. Are people selling or buying going into the weekend?
People are squaring away, but let's face it, the market's a little bit wobbly right now, but that's of little concern to me because we've seen this movie over and over again where we back and fill. What concerned me about this week is the just amount of dislocations we had. S&P is basically flat on the week, but we have the Russell 2000 down more than 2.5%. That can't continue. We have U.S. Treasury in the last Treasury yields the last 72 hours up 15 basis points. U.S. dollars moving up 1% at a clip every day against the major currencies. So there's a dislocation. That concerns me a little bit, but in a macro sense, there's still a lot of negativity. I do think the pain trade is higher.
Larry Shover. We'll see you, buddy. Have a good weekend.